It has been revealed that the US created just 75,000 new jobs last month, much less than the 175,000 that had been expected. For comparison, in the month of April, 224,000 jobs were created. May's non-farm payroll also revealed disappointing earnings growth at 0.2% month-on-month and 3.1% year-on-year. These figures suggest that the US economy is weakening as trade disputes with China and potentially also Mexico hurt demand. Although it does appear that an agreement between Mexico and the US has been reached, with President Trump tweeting on Friday, "I am pleased to inform you that the United States of America has reached a signed agreement with Mexico. The tariffs scheduled to be implemented by the US on Monday against Mexico are hereby indefinitely suspended." The disappointing figures have led to speculation that the Federal Reserve will be pushed to cut interest rates this summer, possibly twice this year. This has pushed shares up higher, with the Dow up 1% on the news. Demand for government bonds also saw the yield on the 10-year US Treasury bill driven down to its lowest level since September 2017. The dollar also fell sharply. It appears that the Federal Reserve officials have been watching the data closely, with recent comments from several central bank leaders appearing to open the possibility for a rate cut, although the timing for this is as yet uncertain. Markets appear to be pricing in a summer reduction, most likely in July, followed by another cut in September or October, with the potential for a third in early 2020. The unemployment rate remained at 3.6%, which was in line with forecasts and the lowest level in 50 years since December 1969. The labour force participation rate was unchanged at 62.8%, which was in line with expectations. Wage gains also slowed slightly. Average hourly earnings were up 3.1%, 1/10 of a point lower than expectations. The average work week remained steady at 34.4 hours. Job growth came mainly from professional and business services, which saw 33,000 new hires. Healthcare added 15,000 new jobs, construction 4,000 jobs, and manufacturing another 3,000. Retail, unsurprisingly, given the recent carnage within the industry, lost 7,600 jobs, continuing to lose jobs for the fourth month in a row. Employment in the sector has fallen by 50,000 since January, with much of the blame put on the rise of e-commerce. Data from the Labour Department showed that government jobs fell in May by 15,000. Most other industries appeared to show little change for the month. The weakness appears to be most evident in areas that depend on exports, with some analysts quick to put the blame on tariffs and the ongoing China trade war. Scott Anderson, chief economist at the Bank of the West in San Francisco, stated that this should be a clear warning to the administration and the Federal Reserve to tread very carefully on the policy front. The May jobs report gives us a taste of what's ahead if these trade threats continue.